All right, welcome. Thanks for spending the time with us here today. We're going to be talking about how you can help self-employed borrowers qualify for a mortgage. Well, we'll help them qualify for a mortgage
Yeah.
so that you can help them buy a new home, whether it is their first home purchase, their next home purchase, their first investment purchase, or their next investment purchase. We're just going to kind of have some general conversation and banter specifically about mortgage programs and products for self-employed borrowers, because let's face it, more and more of our potential audience and our potential clients are self-employed, and also most of you watching this, you too fit that criteria. So just knowing what
hmm
programs or products are available for you as well should be helpful. For those of you that don't know, my name is Josh Schoenly. I am a licensed real estate agent with eXp Realty. I'm also a licensed loan originator with NEXA Mortgage. And Jordan, our special guest here, is part of our mortgage team, the Virtual Mortgage Partners team. And Jordan is an expert on what I would call sort of creative or non-traditional mortgage programs. And he's got lots of experience in the industry, both with NEXA Mortgage, our mortgage brokerage that we belong to. But outside of that, he's got a lot of experience with real estate. He's owned a bunch of rental units.
hmm
And despite the fact that he looks like 12, I promise you he has
yeah.
he's got nearly that many years of experience doing this in the
Yeah.
mortgage world, in the real estate space, etc. I'm going to strongly encourage you, as we get more live viewers here, or even after the live session, if you have questions, go ahead and comment below. And if we don't address them live here, we'll make sure that we monitor the comments, because we want to get your questions answered, and open your eyes. The biggest thing here, I think, is to open your eyes to the opportunity that you have in your marketplace that maybe you aren't currently serving. Because let's face it, as of this live session, there are fewer transactions out there happening.
Yeah.
There are still transactions, but fewer. And so if you can be the problem solver, if you can find ways to help more borrowers in this instance, self-employed borrowers, you're going to be able to make have more transactions, earn more commission, and really help more people in your local market. So with all that said, Jordan, thank you
Yeah.
for
Absolutely.
on the live session here with us. And where should we start when it comes to self-employed borrowers and helping them?
Uh, yeah. I like to think of mortgages in general, like a puzzle, right? Pillars or a piece, pieces that you put together. And self-employed borrowers are usually missing one piece. It's typically income because they write it off on their taxes, right?
Yep.
That's
Yep.
99.9% of it that they run into is they're self-employed. They want to write all their deductions, and the way banks look at those deductions, they don't look at them super favorably, right?
Yep.
So I like to talk about mortgages in almost like three pillars, right? Really three pillars that traditional mortgages are looking for. So those traditional, conventional FHA, VA loans, and they're usually looking for income, assets, credit. Those are your pillars, right? You can be missing a pillar for self-employed borrowers if you have stronger strengths in other pillars. So I'll
Yeah.
give you an example. I'll just give you one program for right now. One of those examples is like a bank statement program. That's really like made for self-employed borrowers, right? That's a product that specifically looks at bank statements, and they use the bank statements to qualify. Um, and typically they require a little more money down, right? So they need a little more strength in another one of those pillars to get them to qualify. So typically that range of bank statements anywhere 10 to 20% down. I'd say closer to 10. But since they have 10% down and they can show their bank statements, they show the assets going in and out, they'll use a ratio system typically.
Yeah.
They'll say, hey, you got $200,000, going in and out of your bank statement. We're gonna use 50%, right, of that, and then they'll use that income. But they do require a little more money down. They also sometimes require a little bit higher credit scores, where like on a traditional mortgage, We can go down a lot of times to 580, or bank statement programs will go down to closer to 640 to 660, right? So the way we're looking at them is how strong are our pillars when we're asking them. Those three questions. Where's your income coming from? Okay, it's a business. Do you write off those expenses? What kind of down payment do you have? Do you have a little more money? So on and so forth. Um,
Yeah.
at the end of the day, on those products, there's a ton of different types and even exceptions on those assets. So I'll give you an example. A lot of times on the income history that we want to see is a 2-year history of people being in business,
Yeah.
especially on those traditional mortgages. So conventional FHA, VA, they want you to have a 2-year history. 2-year history of you being in business. We do have products that waive that history, right? They can do 1 year. We have a product at NEXA that does allow people to be in business for 1 year, and we can do it. But they just require a higher credit score, more money down. Okay.
Yeah.
There's another product that we recently used that is our community program. It's actually a program with 30% down. So if you look at it again, one of the pillars, a lot larger pillar, 30% down, and there's no income at all. We don't even ask about it. There's no employment history. You're just putting the 30% down. They go based off credit. And that minimum credit score, again, it doesn't go down to 500 or anything, but it goes down to like a 640, 660. It's going to require a little bit higher than the norm. But that large of down payment, the bank is willing to forego that history, that income on their taxes, right? They don't need to see it,
Right.
essentially. Okay. What I also like to explain to self-employed clients is there is ways around it. The way we can go traditional. Sometimes they want to go that traditional route. We do have to look at their taxes, help them, advise them. That's more of a long-term plan. But those non-QM products is that immediate use, that immediate help. We can get them into the house now versus them waiting until they fix their taxes, right?
Sure.
And
Sure.
at the end of the day, we don't want to pay taxes. I mean, we don't want to give it to the government at the end of the day. Hopefully no one's watching. But at the end of
Or
the.
not any more than what they're owed, let's say. Let's
Yes.
frame
Yeah,
it. Yeah.
absolutely.
Yeah.
So our goal is, when we're specializing in self-employment, is how do we keep that number down as much as we can and still be able to help them where they can afford homes and get into homes and purchase houses
Yep.
without having to jump through all the hoops, right? That's where our bank statement programs come in, our community programs, DSCR loans. There's a ton of investor loans out there for self-employed people that are no income. They don't require any income on them, and that's a whole nother brand of
Right. Yeah.
topic. And
But for self-employed, bank statement, P&L, written verification of income.
yep, 1099.
Yeah. I
There,
mean,
there's 1099 programs,
yeah.
so you don't
Yep.
necessarily have to own your own business. You could be 1099. Most realtors are 1099.
Exactly.
We have a 1099 program that just averages the gross 1099s. P&Ls are a really good one. We've had products where we have a P&L that's just the last month of
Yeah.
P&L. We
Yeah.
also have the last year. Now, with that being said, they still want to see bank statements, sometimes.
Yeah.
It just depends on the product. But at the end of the day, the name of the game is, how do we avoid taxes? How do we avoid dipping into the taxes and seeing what they're claiming
Yeah.
more than anything?
One of the things that you mentioned, I want to reiterate and circle back to, because it's important whether we're talking about self-employed borrowers or otherwise. The three pillars,
Hmm.
and the idea that because of the number of lenders that we have access to and the number of programs and products that we have available to us, as long as someone has two out of the three,
Yeah,
there
you can
are
almost always do
likely
one.
options for them.
Yeah, I'll give you an example.
Yeah.
Of what I mean. And I love using this analogy, especially when I'm teaching loan officers or real estate agents about it, because it simplifies it
Yes.
greatly. But just to give you an example of where a pillar would come into play. So let's say we have a 700 credit score borrower, right? One pillar. Second, we have good job history, $60,000 a year, W-2, salary, or whatever, but no money.
Yep.
the down payment assistance program, right? There's always a situation where if you're missing one of those pillars, that there is an option. It just depends on how strong the other two pillars are,
Yes.
right? Down payment assistance program typically can't require higher credit scores, right? Lower DTI ratios. And that's just one example. Self-employment, again, self-employment that if you don't have income, they want to see, a little bit higher credit score, more money down.
So the three pillars again are credit, income, and assets. And when Jordan says that you don't have income, it's not that you don't have income. It's that because of the way we're filing our taxes, it looks like we don't have income or we don't have the level of income that we
Yeah.
actually may have.
What we're stating is after our deductions is that our net is less, right?
Correct.
In
Right.
reality, right? We know the game, right? I have a few businesses, you have businesses.
Sure.
We do this so we don't have to pay as much taxes and we want to write things off as much as we can.
Yeah.
But it hurts us when we're going in to purchase a house on those traditional government-backed loans,
Right.
FHA, conventional, because they'll go off that net.
Sure.
But yeah, the pillars at the end of the day, it is meant when I'm talking to agents and then we're talking to a client and then when they're going through their exploratory questions, right? They're
Yep.
going through those exploratory questions as they can identify those pillars and say, okay, you're missing two of them, but I think you have an option, and they can speak on that option and say, hey, I think a bank statement program would be great for you. Have you talked to a lender about a bank statement program? And they're like, what's a bank statement program? Well, it's where they average your bank statements.
Yeah.
Same concept as probably most agents are doing today when they're asking those questions. And when someone says, I don't have any money, well, there's down payment assistance options, right?
Yeah. Yeah.
They're probably already doing it. So how can we do that with self-employment borrowers more regularly and investors? Investors run into this issue a lot too, where those traditional programs like conventional in Fannie Mae and Freddie Mac, they require you to have a certain amount of money in taxes and qualified debt to income ratio. We do have investor loans that have DSCR products. DSCR is based off the property, right? More, but it's also based off credit and assets. It's not based off income.
Yeah.
So at the end of the day, it's always going to have at least two pillars. Sometimes you can be missing more than two, but usually it requires even a heftier down payment, things like that.
Yep. So if this is your first time checking out our channel, subscribe to the channel, Wake Up Real Estate channel, number one. Number two, if you have questions or not sure about anything that we've been discussing here, or just in general about self-employed or non-traditional mortgage programs, you can comment below. I'd be more than happy to talk it through with Jordan here live. If you're watching after the fact, we'll go back and review those. And if you would like to chat with myself or Jordan, you can you can get more information about our co-marketing scrolling across the bottom, which would also give you a chance to then schedule a time to chat, or you can just go directly to scheduling a time at josh15.com, josh15.com. So I wanted to spend a little bit of time on programs and the pillars and thinking through that.
Uh-huh.
But then I also wanted to at least spend a little bit of time on brainstorming and sharing ideas of how realtors can use these kinds of programs
Hmm.
to get more business, right? To actually, like, how do they start those conversations? What are some things? And I've got some ideas, but I'm sure you do as well, and we can kind of
Hmm.
piggyback off each other there. But what how do you see, I'm a real estate agent in Central PA. I've got a team here. What to you would be examples of ways that I can use programs like this to create more conversation opportunities and ultimately serve more clients?
The most common one that I run across that I get invited to participate in is seminars for self-employed.
Yes. Yep.
Right. That is going to be by far the number one that I probably get asked to participate in the most. You can bring a lender typically there
Yep.
to chat.
And we've got a co-marketing partner in
Yeah.
Maryland that's doing just that. I was kind
Yeah.
of I was hoping that's where you were going to go. That's
Yeah,
one of the things.
yeah, yeah, we do have someone in Maryland that's actually helping someone in your organization that is having a specifically self-employment seminar.
Yep. Well, a
In
home
brand
buying seminar for self-employed
self-employed
folks is
people.
the
Yeah.
idea. It's a home buying seminar, but it's more catered towards self-employed people.
In setting them up to qualify.
Right.
So I'll give you an example. So sometimes it's a little bit of coaching on that as well that you have to have. Uh, and this is really what you cover in your seminar. I've had people run businesses out of their personal checking account and multiple accounts with a wife and savings and things like that. That makes it harder for bank statement loans.
Yeah.
Like this on the back end side. So being able to explain those things and educating your things and working with a lender one-on-one to say, okay, I want to go after self-employed people. What are my first steps? That would be one of them. First step is learn as much as you can and then go into, okay, let's have some, seminars.
Yeah.
And how we're going to present those seminars. That is one, probably the biggest one that I run across.
And so what I want to emphasize with this idea, whether it's the seminar or just the idea of you specializing or having a specialty of yours being helping self-employed borrowers, is that is a very tangible way that you can be of greater value and service in your local market, right? I talk to agents all the time in big markets where there are loads and loads of other agents, right? And so finding your competitive advantage or what makes you unique or different or why someone would want to work with you versus the 5, 8, 10 other agents that you are competing with or that they may, that may be in their family or friends or whatever. If you establish yourself as a self-employed borrower sort of expert, people will go out of their way then to refer you. Oh, you
Yep.
know, when they hear people saying, I wish I could buy a house, but I'm self-employed, blah, 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 things of that nature, then they can go ahead and refer, oh, you got to talk to my friend Josh. He specializes in helping folks who are self-employed to qualify and buy, buy their first home, their next home, whatever the case may be. And so a workshop like that, an in-person workshop like that is one way, but you could also take that information and turn it into bite-sized pieces of content. And you being just simply being the person that's making your market aware that these opportunities exist, that alone is going to create conversation opportunities for you and bring you inbound opportunity versus having to chase after that opportunity.
I want to make a comment on that. It's not necessarily pertaining to a realtor doing it, but a lot of so you have retail lenders and brokers, right? You have retail lenders and brokers. Retail lenders typically you wouldn't brand yourself as a self-employment expert as a retail lender because you just don't have the products. You don't have the options for self-employment as
And
widely.
and for the layperson, when you say like a retail lender, can you
Mhm.
without
Retail
naming?
lender would be like Wells Fargo.
Okay, okay,
Wells
it's
Fargo,
like
kind of a, a
the
very, they lend their own money. Wells Fargo, big branch, but they're not going to do the non-QM, hey, you're missing one pillar stuff.
right,
They might have one or two products, but for the most part, it's that local bank, credit union, right? Retail, that traditional lender. That's what we mean
yes,
by retail lender.
yep,
Broker, multiple lenders, right? Tons of lenders that tons of different products. You'll want to pair up with a broker, if you're going to tag yourself as an expert. So you'll see a lot of lenders do the exact same thing. They go to their realtor partners and they'll say, "Hey, I'm a self-employment expert." Because they're on the broker side and they have 30 different products that could fit
right,
30 different bank statement loans, 30 different options. Some bank statement loans go down to 580, some go down to 640, depends on the rate, right? You have different options for people and you can just help a more variety.
yep,
And absolutely that works for lenders. It will work the same way with realtors. Yeah,
yep.
absolutely every time. It's just opening your way up of saying, okay, what products do I have? Can I speak on them, things like that, and be able to help them.
Let me give you another idea of how you can use a program like this or just having the knowledge of programs like this to get more conversation. So one of the things that we recommend for our realtors, both my EXP sales organization and other realtors that I coach and train and provide, videos like this for, is every Friday morning sending a weekly email. And we've got an entire template and format for that. You can check it out. It's posted to the community tab on our channel here at Wake Up Real Estate. And if you can't find it, just let me know. I'll get it to you. That's not the point. The point is, I'm going to be a living example of this because tomorrow morning I'm going to include in that email a short blurb about asking the question: are you or someone you know self-employed and struggling to qualify for a mortgage to buy your dream home? Let's chat. We have programs that that may work for you. And if not, we can at least get you pointed in the right direction, something of that nature. And I
Yeah.
might even do it with a short little video explainer. But that's another way that you can, by just raising that awareness, right? Because they may not be, but each one of the people receiving that email, they have their own sphere of influence, right? And their cousin, their coworker. I guess it wouldn't be coworker, but their cousin, their neighbor, their longtime friend, whatever the case may be, they may have those conversations, and now you're naturally injecting yourself into the conversations that they're already having. And by speaking that and talking about that specific scenario, you're creating opportunities where they maybe didn't or don't exist for you currently.
Absolutely.
Yeah.
I've had people just pop into businesses and ask for surveys, right? I've had people just get involved in the community, BNI groups, tons of things,
Yep.
tons of different um, marketing activities that you can do on a daily basis that will help spur those conversations and say, hey, I am a self-employment expert, right?
Yes.
And then they're like, what does that mean? Right? It just gets it going. You don't hear that term a whole lot, right? Usually you hear the term, oh, self-employed is hard. Like I want to stray away from it. This person's self-employed, I'm not going to spend as much time with them, whatever it is. Well, depends on who you're sending that deal to. If you have a broker with multiple products, you're going to have more options than that. Wells Fargo, if they go to Wells Fargo, they are going to probably tell them no. You
Yep.
don't qualify because of your taxes, right? But
And
they're
and
not going to
so
give them any other options, right? They're not going
right.
to tell them about another option at another company.
And that's why I'm here, why I'm where I'm at. Because with NEXA Mortgage and our team, we're problem solvers, right? Where you may go to a Wells Fargo or a retail lender and they tell you no, we're going to tell you we're going to look at how can we, what can
Mhm.
we do, what programs are available to you right now. And if the answer is none right now because we're missing 2 out of the 3 pillars, we're going to give you a plan for how you can address one or both of the problematic pillars, let's say at the time, so that we can
Mhm.
then open up opportunities for you. So, kind of in closing here, a couple of things that or opportunities for you if you would like to explore this in more detail. Number one, if you want to chat about how you can incorporate this niche into your sort of marketing plan and the type of clientele that you service, I would be happy to chat with you. We could even do a conference call with Jordan. You can schedule
Mhm.
a time at Josh 15. We can talk about different ways. We can explore doing a home buyer workshop catered towards self-employed borrowers, for example, or we can come up with some some easier swipe and deploy means of getting the word out and creating those inbound requests. That's number one. Number two, if you have, okay, this is a big one. If you're watching this live or after the fact, if you have anyone in your database, in your sphere of influence, in your past client list, whatever, who have been previously denied by a
Yes.
retail lender or even another broker, and they're still interested, they're still motivated, they still want to do something, we would be more than happy to give it a second look and see, A, are there any programs that fit right now, or B, at minimum, give
A
them a
plan.
plan for here's
Yeah.
what to do next, right?
Yep.
Here's how you can address that thing. And that's one of the things that we've been, you know, very successful with, and it's one of the biggest value propositions that we're offering our co-marketing partners and just the realtor space in general is just being a second opinion, a second set of eyes, and offering value in advance of of getting those. Everybody likes the easy 3 pillar fit into any box
Mhm.
borrowers, right? That's easy,
Yeah.
right? But with everything going on with where rates are going and are at and with our economy, et cetera, there's fewer of that. We want to be problem solvers and help all of you
Yeah,
not just survive but thrive.
yeah, absolutely. There's fewer, but even on top of that, 60% of people don't qualify for a mortgage right now,
Yeah.
right? In general, right? If you're looking at it, um, a- most people are not going to be ready today, right? And ready today. They have to prepare. And those pillars, I explain the same thing to every client.
Yep.
You have 3 pillars, right? That we're looking at is we gotta get your income in line, we gotta get your assets in line, and we have to get your credit in line. Sometimes we can waive one of those, right? I have people where there's missing multiple pillars, and then we focus on one really heavily so we can get rid of another one, right?
Yep.
It's thinking outside the box and putting the puzzle back together in a way that fits for that specific client, because everyone is different, right? A self-employment buyer might have a low credit score and then also a claim everything off on their taxes, but they might have incredible income, right? It's one of those things where it's okay. What is the shortest route to get them into a home versus saying, hey, you don't qualify today, work on your credit and come back, and then that credit repair company is going to try to get them to an 800 credit score. That is called what I call longevity, long run, shooting, and not going after specific programs.
Yeah.
Put the program with the client and then get the client to fit in that program versus having that client fit for every program.
Right.
It doesn't make sense. And I think it draws out that process way longer than it needs to be. And you get people that get discouraged and disinterested after a while. They're just not interested in it after,
Two stories I will tell. Number one, when I went to actively um, uh, selling real estate again at the beginning of 2020, my first 2 clients, both were clients that were told by other lenders they weren't ready. And because I asked good questions, because I did some legwork, and because I got them to a mortgage broker, I was able to help them where they had been turned away by other realtors and lenders. Okay. So because I took the approach of how can I help them, not they don't fit in this perfect box. That was how I started actively selling again. And the second story I'll tell, my initial experience with Jordan was him being able to save several transaction sides because he was not thinking inside this little box. He was looking at the entirety of the picture of not just the transactions. For example, in both cases, there was a home sale and a home purchase going on, right? So not just fitting those together, but also looking at all of the different pieces of their financial picture and how we could maneuver things to make something work. And so in one case, we were able to take a borrower who was just going to be content renting. She was selling her fairly new townhouse, and she was going to be content with renting because she didn't like the scenarios she was being given by another lender. And Jordan was able to put together a scenario that made sense for her, and she ended up actually buying another brand new townhome just closer to family. And without Jordan's expertise and that creative problem-solving approach, that wouldn't have happened. And then there was another transaction that Jordan was able to put together where it was clients that were selling their home. They ended up actually selling to a family member, and he helped them basically avoid doing something illegal, number one, but then also was able to help navigate selling that home to those familial buyers using a gift of equity, which is another strategy all on its own, and helping them buy a new home up this way so they could get some better schooling and care for their one of their children, right? And so
that one was unique.
Yeah.
But at the end of the day, they got it. Her sister that was buying her house didn't bring any money to the table. They didn't do anything. Got an incredible rate. They even bought down the rate a little bit. They probably got way under the market, as well as they got all the money that she needed so she can move too. And they did it quickly. They were able to do it a lot quicker than listing the house, and they were trying to refinance and do all these. And I was like, I don't know who's leading you down this path, but it just doesn't make sense when your sister already wants to buy your house. So just do it all at once, and they'll get there where they're trying to go. But
yeah, right on.
Anyway.
So if you have any scenarios that you would like us to take a look at, let us know. If you want to chat about what we're doing on a co-marketing front with realtors all throughout the U.S., or you just want to chat about specific self-employed programs or products, any of that nature, you can schedule a time at Josh 15 right there, josh15.com. Also, all of my contact information is in the description. Wherever you're watching this video, feel free to reach out or comment below as well. We want to help. We want to help you, and we want to help your clients and potential clients get the best the best deal possible, and find ways to make deals happen where they may be getting denied otherwise. So, Jordan, thanks. We're gonna. The other thing I'll announce is we're going to be doing regular sessions like these around different types of programs. So, for example, all-in-one mortgages, blanket mortgages. Jordan hinted at DSCR programs.
Yeah,
We'll talk about
investors.
that. Other short-term rentals. If you're someone that's looking to invest in
Airbnbs.
short-term rentals, Airbnb, etc. Down payment assistance. Jordan hit on those a little bit. Reno loans, asset depletion loans, helping foreign nationals, ITIN loans, P&L loans, which is kind of like a subset of self-employed, commercial loans and options, bridge loans, using reverse mortgages for purchase or reverse mortgage as a refinance option. All of those things, we're going to be doing those as regular sessions here so we can make you aware of the different programs and options that are out there and available to you, and help you make those connections so you can be of greater value and service, and ultimately help more clients in your local market. So stay tuned for that. Make sure you subscribe to the channel so you are notified when we do more sessions like those. And as I said, if there's anything at all we can do to help or support you from the mortgage perspective or lead generation, co-marketing, any of that, I would love to chat. Jordan, thanks again.
Thanks.
And I'm sure we'll talk again real soon.
All right. Thanks. Appreciate it. Have a good one.